Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick. On the show today, I guess we'll continue walking through whatever macro headlines we got overnight. A number of interesting earnings to discuss as well. We had a couple of pod stocks, TLRY and Aurora Cannabis, reporting yesterday. This morning, we have Alibaba and Macy's and a couple others, children's plays as well. Macy's, I believe, is just out. So we'll walk through the earnings, we'll walk through the ratings, we'll just kind of talk through what to expect in today's market. And our guest, we're very excited to have him on today, Gene Munster, Managing Director at Loup Ventures. We'll talk about Apple, talk about their exposure to the trade war, get Gene's general thoughts on various tech stocks, and he'll be on at 8:35, so looking forward to that. Joel, what's the word here overnight?
We're in the red, Spencer, here by 10 1/2 handles here. Pre-market high way up there at 28.48.50. We will not be seeing that today. Your pre-market low, 28.27 1/4. Not much, folks, until you get down to 27.21. That was our intraday low from yesterday. Crude in the red by 54 cents at 61.24. We've had a couple lows in the $60 handle. The lowest of those lows, I believe, comes in at 60.06. Gold back over 1,300, up $4.70 at 13.01 even. Silver into green by a little over a penny, not really moving much. Bitcoin doing the old 8,000 shake and bake, 82.35 stands as your high, 78.05 on the downside, and just trading here at 8,030. I don't think we've posted a close yet over 8,000 in Bitcoin. Triple D, I mean, we got some earnings, but I think this best to characterize this as like just a yo-yo market here.
It continued.
Yep.
I mean, we had a nice rally yesterday, obviously, because we know Trump was saying eventually there's going to be a deal, and that's what kickstarted us. And it went on for most of the morning and into the afternoon until about 1:30, and we started to give some of it back. Giving a little bit more back here this morning. I mean, this market's just nervous, and we've seen a couple stocks report here. Spinner was just saying a CyberArk report yesterday. Stock was up significantly, did make new highs, and then pulled back and gave it all back. So it's been a market where sell the rip has been working. Alibaba this morning, for instance, reported it was trading up significantly on its report, and it has given it all back too. So there's just overhead supply in pretty much every stock right now, as money managers are still nervous, and they're using rallies to raise cash. So that's what you're seeing. So it becomes this market that you got to have that mentality, at least right now, when you're getting these rips, especially the ones on earnings that are popping 5, 6, 7%, they're quick to give it back. Even TLRY was up significantly more on its report. It's come back too. So let's talk about a few of these stocks. Maybe we can go start with the big one from this morning, which is Alibaba, which has now went to the red. Not good for Denny's portfolio. It still appears to be under attack. Give me the details here on the Bobster.
Yeah, the headline was good at 7 o'clock this morning. Q4 EPS of $1.28 versus a 96-cent estimate. Sales of $13.93 versus $13.32 billion. So they beat the estimate on both the EPS and sales last quarter. And like you said, though, a big reversal.
How high did we get here? I saw 177, Joel. Maybe you saw. Oh my goodness! I'm looking at the pre-market chart now. 183 for real? For real? For real?
Yeah.
This is not the market to be chasing stocks and guys. Not the market. I don't know who's buying this thing. Yes, it was a great report, but this is a market that is selling the rips on everything, no matter what the report seems to be. So when you're buying Baba, which obviously got beat up here over the course of the last week and a half since the Trump party started here, you've got so much overhead supply. Everybody's hoping to get their money back. So if you're out there this morning selling over 180, congratulations. Smart move. Stock is already back down. How high did we get?
Well, on the pre-market chart, we got to 183.48.
Holy cow.
And then you
People
had
are crazy. These people are crazy.
they had a high, you had a daily high at 183.20. And you just look at a stock like this. You mentioned it perfectly, Dennis. I mean, you go from 195 and change to under 170 in 6-7 sessions. I mean, think about all the people that just bought on the way up here looking for 200. I'm going to just buy it here and just sneak out at 200. So you got the overhead supply. We're still not back in the yesterday's range. We're really close to it. Yeah. I just use the close here. If this goes red, then there's not much underneath to yesterday's low at 71.48. And then the actual low of the move at 68.78. So staying green important here for Baba. And just another stock, I think it was off a ratings change. Didn't Ralph Lauren get upgraded yesterday? Was that the stock? They had earnings?
That was earnings, I think.
Yeah.
Was it trading up? I can't remember. Honey Badger memory.
It was trading up.
Or Goldfish memory.
Yeah, it was trading up in the pre-market, and then they just
overhead supply.
Yeah, just took
it straight down. This is a market. It's telling you, well, the bears are a little bit in control here, so they're selling rips. They're selling rips and asking questions later, and you've got to be aware of that. So first of all, don't buy the rips because in some cases they work. The only one I can think of though lately was Roku, and it has held on. But in most of the cases here, we are seeing them come in to sell the rips. So you get the initial pop and they come back in. So TLRY is the question now. And TLRY obviously had earnings last night and traded up significantly. It's given back part of the gains. Lots of overhead supply issues here. Different dynamic, maybe. I mean, some of these pot stocks, and we also saw it with Aurora Cannabis here. Again, Denny's portfolio under attack because ACB is down. It popped on its earnings report last night and has given it all back. TLRY is trying to hold on to their game. So let's do ACB and TLRY together. Give us the numbers here, Mr. Israel.
All right, TLRY was Q4 adjusted EPS 27-cent loss, which was in line with the estimated sales of 23 million versus 7 million on a year ago. So 23 million versus 7 million a year ago. That's a nice year-over-year increase, 195%. And ACB, you said. So they waited late, man. This was out till
way late.
This was out at like 7 o'clock last night. What did they do last night? They did a Q3 loss of $158 million, which is not comparable to the same quarter last year. They only lost $19 million. Their net sales on a year-over-year basis, $65 million versus $16 million a year ago. So I guess they're making more money than they were last year. They reaffirmed their guidance for the fiscal year as well.
All right, ACB gives it all back. TLRY is trying to hold on to the gains, like we said. How high do we get on TLRY, Mr. Elconin?
TLRY, which is still trading in the green. The initial spike, 53 even, and we've leaked $3 already.
We've leaked here too. It's holding on. It's trying. I mean, there's not every single stock. And as traders, you always work just in, the odds percentages, not things going to work 100% of the time. But what has been working has been fading the rips. So in some cases, it's not going to work. In a lot of cases, it has been working, though. So this isn't necessary that it's going to give it all back. But, fading the rips has really been working well. So we'll keep that in mind. And even keep it in mind in a stock like PLCE, which reported this morning here, too. It is trading higher here. I didn't see where it went up to, but we're up about $3.50. Might as well cover all these earnings reports, Spencer.
Georgian's Place, okay. PLCE, Q1 EPS, 36 cents, down from $1.87 last year. Sales of $412 versus a $391 million estimate. They did, however, raise their guidance. The fiscal year EPS guidance was raised by 50 cents from 5.25 to 5.75 on the low end of their range. Their Q2 EPS guidance is in line with estimates. Q2 sales guidance a smidge light, but the fiscal year EPS guidance raise is going to be the headline here.
Stock trading higher. Talk about the pre-market action.
Let's see. Children's Place getting a pop here, up 414. Same thing here. You hit 120. You've backed off almost 4 handles, but basis the 15-minute chart here, you are finding some support at 115. So you hold 115 here, which is above the range from yesterday. I think you got a chance to go back up and challenge that that pre-market high below 115, wide open. 112.80 was a double top from Monday and Tuesday, so that will act as support. But once again, a little bit of fade off the pre-market high. And I did get to look at ACB real quick. I know that's fading too. A little bit interesting here in this one because you had the Nelson Peltz gap, and 8.25 filled the gap. You filled the gap yesterday going to 8.10, but you're giving it all back today. Let's see if it can get back over 8. If it gets back over 8, I think you got a little bit of a chance of a rally, but I don't know. Just kind of looks like it's opening into support here. We'll see if it holds off the open.
So just talking Macy's, we might as well we're just pounding out the earnings reports here, going super fast here, but let's do Macy's too. It is getting a lift. It's a good point being made by Spinner here that the TLRY story is kind of different because TLRY has been in the doghouse for so long. I think, people hoping to get the money back on this one are a lot higher. So you don't run into immediate overhead supply issues like you would in Baba, who obviously the people who had in the last week are down. Macy's is the same story. The people that are in this thing, the majority of them are probably in from a lot higher prices. So they're not getting their money back with $1 pop. So you don't run into overhead supply issues as quickly as you do with something like Baba when it's getting back in. Everybody who bought in the last week and a half, and obviously anybody who bought in the last 2 months is getting their money back. It's a different story. So it's a different dynamic to think about there. Stocks that have been in the doghouse for a long time, sometimes they get a relief pop and they can hold. Sometimes they can hold, sometimes they can just hold. But just different dynamic, TLRY and Macy's compared to the other couple stocks we were talking about.
Yeah, boy, someone's had their foot on the gas pedal here. On the downside, step down seller, just relentless here since April 24th. Just lower highs, almost consecutive lower highs, just a few double tops in there. That pop over $23 was snuffed out pretty quickly. We went to $23.75, and now we're back down to $22.75. Let's use that as a target. Couple highs, 3 highs, right at that 33 or 23.75 area. I don't know if we're going to get back up there. Coming back on the downside, scratch on the day, 21.80 was your close from yesterday. New low of the move, recent move yesterday at 21.08. So, man, oh, man. Fading again, once again, the trend, fading to pop after earnings.
The headlines on the Macy's report were perfectly fine. Neither really good nor particularly bad. The EPS beat 44 cents versus 33 cents. Sales slight miss, 5.5 versus $5.52 billion. Comps were up 0.6%, and they reaffirmed their fiscal year sales guidance. So perfectly fine report, nothing particularly amazing or bad.
The stock's just been such that, and anything that they're reporting okay, and the stock is probably going to lift. I mean, it's still the 6.65% dividend. Tim Seymour was on last night on CNBC Fast Money saying he thinks that dividend is completely safe. I don't know if it's safe or not. I can't say that. I can just say that this stock has been in the doghouse for a long time. You can get a pop, and it wouldn't surprise me if this, if the thing, went up and continued to go up, but it wouldn't surprise me if it gives it all back to you. So it's a harder one to call. The other ones that, have been the momos, like the Baba getting that 9-point pop here on the initial report, those I think are automatic fades almost, unless you get the bad luck that you have the Roku one. Those are working a lot better, but it's a different dynamic in the stocks that have been in the doghouse for a long time, simply because sentiment is so bad already towards these stocks that anything that they report even remotely okay can cause obviously a nice lift.
S&P is continuing to sink here, down 11.5 handles, 28, 27.5. Your current low, 28.26. Dennis, are the stocks keeping up with this? I guess so.
Yeah, they are, Joel. We're beat up here again this morning, and it's early, but you look and you can see, okay, the banks are getting hit already here this morning. TLT is significantly higher. Always bad for the banks. So you got Citigroup down 0.7%, JP Morgan down 0.6%, Bank of America down 0.8%. I mean, they're all going to be your source of weakness, especially with the TLT higher. You automatically think when the TLT is higher that utilities are probably going to be a little bit stronger. We have seen the defensive play come in, so it's not surprising that you're seeing a couple utility stocks get bid here this morning. But for the most part, we are seeing weakness in tech. We're seeing weakness across the board. We're just seeing people take profits from yesterday's rally. There is nervous money managers out there still thinking that we're not getting a trade deal here anytime soon, and they're raising cash. And they're doing it in the Momo names. And, a name like Baba, yes, is up $1.31. It was a fantastic report. So it's actually disappointing for that to only be up $1.50. Like I said earlier, it was up $7 or $8. So that got overdone probably. But I mean, it does. I don't know if the individual, like you were saying, Joel, some of these individual fundamentals on the big stocks don't matter as much as what the next Trump tweet is going to be. So you can come up, blow the numbers away like CyberArk and Baba. It doesn't necessarily mean your stock's going to continue to take off because the overall macro picture here is cloudy.
All right, let's move on here. And man, we skipped around. We did get to TLRY, the ACB.
I think we've pretty much covered them all. And we can talk just general market talk. But Agilent was the last one that I had on my list to talk about, and Agilent is down significantly here on the pre-market. This did not get any pop at all, and this has been fading right since basically since it reported.
Yeah, well, a miss and a miss and
never good,
and a miss and a miss, basically a miss across the board. So they missed on their missed on their EPS earnings by a penny, 71 cents versus 72 cents. Missed on their Q2 sales number as well, 1.24 versus 1.27 billion dollars. That's not so bad, but then they also missed on their Q3 EPS guidance estimate, or at least it was a little bit light. The estimate was at the high end of the range that they gave, and their sales guidance was same thing. Was a little bit lower than the estimate there. Guidance slightly lower across the board, so just a little bit lower in every number.
Interesting.
Straight down.
Yeah, well, I don't know what to say here. We've seen this so many times. A weak stock. Someone has a bid here, and that bid 68.50 is your pre-market low. You just came back down there again to 68.50, 68.60. So there you go. I mean, there's your line in the sand. Someone is making stand. I can't see anything here on the monthlies to support that. It's just one of those.
What? And I've think about Intel. When Intel came in disappointed, and then they came out and said more bad stuff. When stocks start disappointing, they can stay in the doghouse for a long time. I don't see any reason at all to jump in here and buy Agilent $69 here this morning. I don't see any the major support for this stock. If you'd look, we're not talking today. We're not talking to you day traders. We're talking to you to longer term investors who are thinking, oh, Agilent's cheap at 69. I think this could go to 61 or 62. Not today, not tomorrow, but over the course of the next month or two, especially if the trade wars continue, because that's where your major support really came in. Look how many times we came down there and tested it. Now we've come down from $83, $84 all the way down to 69. Why not go the last $8 and get down to 61? I don't think it's bouncing right back. I don't see any reason to jump in here and be a hero and say that 69 is the bottom. I think the stock eventually goes back and tests that 61, 62 area.
Yeah, and like I said, someone is bringing in some stock here. It might be some of the, like the options things that you talk about, or someone just covering a short. On the dailies, you just had a steady march up for the year, starting at 62 even. That's the area Dennis talked about, and then also he was just talking long-term support in this 60 to 62. Going all the way back to the middle of 2018. You just look at this at the monthly and you see all those lows there. I mean, why not go test that?
Yeah. There's so many lows. It came back and then, we went down, tested. It looks like a half dozen times when you go down there and really look at the weekly chart or the monthly chart. 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 10 times throughout 2018. We went down and tested that let's call it $60 to $62 area here. I mean, you've come this far. Why not? So I don't know if the play is to short it when it's $7 in the hole, but this thing pops to 71, 72, maybe gets a little bit of, life back in it. That's when you strike short, in my opinion. So I actually think the path of least resistance for this stock is still lower.
Yeah, and I mean, as much as it's holding 68.5, it can't get over 7.
And we've seen things just continue to whoosh. Like, it's not out of the realm of possibilities. It could lose another $2 or $3 even today. It's not, beyond possibility here. It wasn't a good report. This market has not liked this, and we're punishing stocks that are reporting good reports. What do we do with stocks that report bad reports? We're going to really punish those sometimes, I guess, unless expectations are too low. But this wasn't a stock that had really super low expectations. This was a stock that wasn't that far off of its highs, and now disappoints. So I think slippery slope potentially down to 61 over the course of the next, I don't know, month or so.
And also sell stops. You're going through 7 points here. You don't think there are any sell stops?
We've got a few there, and those don't obviously come into play usually until the open. So typically a lot of your brokers only use 9:30. So you're looking at that, and yeah, it's a good point there too. I mean, a lot of your money, and this is always something to remember, is that the majority of your investing public, especially your institutions, don't really trade that much in the pre-market. You're not going to have Fidelity coming in and dumping 1 million shares in the pre-market because the stock would go to zero. There's just not the liquidity there. They're going to wait till there's some liquidity. So it comes in, maybe opens at 69, maybe then they got some bids to hit, and then they start hitting them. So, the majority of your sellers in this probably have not even come in yet. So that's something to consider as well. Now, that being said, the stock is beat up here this morning. So I never like selling something that's down 9%, selling it short down 9%, but I just don't see any reason to buy this thing. Not after that report.
Dennis, you got to take a look. I don't know if Spencer,
What do you got for me?
Bring it up here. But take a look at the Agilent ratings here.
I'll pull it up in the car right now.
Are they all buys?
Oh, no. Oh, man. If you're long this stock, I mean, I don't know.
Downgrades are coming.
I don't know if you can make lunch bets on downgrades or price target cuts, but I am.
Oh, my God. They're all buy. There's not one sell on it.
There's a hold.
There's one hold and no sells on this, and they're all buy.
Damn later from Deutsche Bank. Good for you.
So there you go too. Downgrades probably coming. So obviously it reported here. Well, it reported last night though. So we didn't see any downgrades here this morning. So nobody's getting too excited here yet. But keep that in mind. If the stock doesn't bounce back, you could have some downgrades coming too.
Yeah, or let's maybe like the last one in the pool on March 26, Cowan maintains outperform, raises the price target from 80 to 90. Boy, here we go. So that's another thing, and that's a nice thing here, on Pro, just to get a flavor, for a stock, whether it's heavily covered or not heavily covered, but outperform, buy, overweight, buy, overweight, buy, overweight, outperform.
You're telling me
overweight. Oh man, this stock. Oh, I don't know. It's something to keep in mind here when the stock, let's say, even sells off all day. Let's say it settles at $65. You're like, okay, little pop tomorrow. Is something to keep in the back of your mind of all the posts. I mean, they're going to have to do something, right? They're going to have to make a move. They're going to have to pick up the phone and call their clients and say, yeah, we're changing our rating on that stock. But anyways, spent a lot of time on Agilent. Thanks for
RNH making a good point too. Just the stock that reported disappointing numbers was Herbalife, HLF, and that reported back on May the 2nd. The stock gap down $3. Look what it's done since. It's went straight down for the last 5 days. I mean, a little bit to do with market effects. The market hasn't been great, but we actually had, a nice up day in there too, and it didn't go up that day either. So they continue to beat up stuff that disappoints, and they continue for a long period of time. So I would say moral of the story is don't try to be a hero when a stock reports disappointing earnings across the board and is not, one of these high-flying momentum names here. A lot of times they continue to sink, and sometimes the high-flying momentum names continue to sink even farther. I mean, the trade desk, TTD, think about that one too. Finally started to bounce back yesterday with yesterday's rally, but it reported and it had a huge whoosh down $180 and then made a new lower low, finally getting back up. We talked about the 180 support. It kind of held in there, and it is up here this morning. It was on Kramer last night. He was tooting its horn a little bit there, so that might be what's helping it this morning. But now you look now on something like TDD. Now you have a tradable bottom. The stock stopped going down, but that tradable bottom is way down at 173.60. So I want to buy it at 187. Now you're 14 points off that low, and you almost have to give it to it. So I would love that thing to come back down and retest like 179, 180, and then maybe potentially strike for a long. But is this the market environment? And there's another question in the chat too. Is this the market environment that we should be raising cash in, or is this the market environment where we should be jumping in here and getting ready for the next bull run to potentially 3,000 and starting to accumulate some stocks? What are your thoughts on this?
I mean, if it just when you get those big red bars in there like that, just after such an extended run, it's just It's just hard. There's just so many people, looking like that red bar in the trade desk. I mean, what's it get? It had the earnings. It got hit through that. If people looking, I mean, there's just natural order flow is going to bring it down. You did have the all-time high at 230, 270, and then well, maybe I should have got out at 220. Oh, maybe I should have got out at 200. Oh, maybe I should have got out at 190. So the levels are going to come down. I think for this one, I think the shorts are feeling pretty comfortable until you get above 192.67. I mean, your 3-day high, that's 7 points, and the shorts are waiting for any kind of rally, right? To perhaps
they like 50%.
Yeah.
So you get that like 200 area. If you were to get lucky enough to get up another 13 points, I think there's probably sellers all over the place around 200. So you do run into an overhead supply issue here.
And Dennis, the stock ended 2018 at 116.06. So there's
a lot of money, a lot of people sitting on a lot of money still here too.
Well, yeah. Here's my question though. Didn't we just have a natural correction 5 months ago? We just went through this.
We did. But right. You know what? And that ended up being a V bottom. It really did.
It was a natural correction. It was perfectly in line with typical market mechanics.
It turned into a bear market for a few days because they say 20% is officially bear market territory, and we did. Right. It was a crazy route. I wasn't even so much the sell-off that took us by surprise, because remember, we had a couple chances back in late November, early December, where I raised cash. It was the wickedness of the rally that really surprised me, because I did not see, when we rallied, remember when we were way down, I even called for the 1,000-point Dow up day. That was right at the bottom. I said one of these days we're going to be up 1,000 Dow points, and it ended up being that day, and we had never done that before. But remember that I said, even if we rally 1,000 points, I'm not sure I can come in and be a buyer at that point in time, because, I think this is going to be too many sellers that will come in, to sell that rally. Well, that never happened. We had the 1,000 Dow point rally, which I called correctly, but then got everything else wrong because we just continued to rally, and it ended up being a V bottom. Now, we came all the way back up. The problem is we failed just above the highs from where we got to back in the summer of 2018. So it's a difficult technical, you could argue it both ways from a technical perspective. You could say, hey, we've got another double top from where we were back in the summer here, and that's not good news for the bulls. And we had just a slight breakout there, so you maybe sucker a few people in when we made the new highs. So you got a few people, shorter term traders, that are probably caught long here. I mean, the Trump tweet was completely by surprise too. I don't think anybody saw it coming. I mean, they didn't, because we were down 500 points, that morning on that tweet. So any type of rally here, if you're a money manager, that's why we're seeing it happen. The examples are again and again. The CyberArk rally yesterday, and it gets faded immediately. The BABA rally this morning gets faded immediately. It's showing you that money managers are scrambling to raise some cash here still, and they're using the pops and the earnings to do that. So the tea leaves are telling you that there's still trouble ahead. But, you look back to December and it looked like a really ugly picture too. And then we ended up getting a V bottom and made, a 20% move in the first quarter of 2018. So it's difficult to just say that this is, going to be, we're in trouble and we're going to go back down. I mean, you could argue we could get another V bottom. It can happen. They're more rare though. Usually you have some back and fill, as opposed to straight up like we did at obviously the beginning of 2019.
No, but my point in bringing that up though was you asked if this was a good time to be raising cash.
Yeah,
that's not the way to look at it.
I personally have not raised any more cash in my investment portfolio. I raised too much before, so and I think I'm very typical. I think I raised too much before, and we went straight up and I got caught. So now I'm looking to actually put some of that cash to work here on pullbacks, and we know I did. I bought some Qualcomm the other day. I bought some Disney the other day. I bought some of that Sean's pick, Pixis, PYX. I bought some of that just 2 days ago too. Just in the longer term, just trying some things out here. And PYX was up like 10% at one point the other day or yesterday, which was crazy. But so I got that one timed pretty well. But I mean, I'm nibbling in my long-term portfolio, but I'm still overweight cash. And if I'm typical, that means if you got people that are sitting with some cash still, that cash could still come in here to work and could still be looking to buy pullbacks here too. So I don't know. We moved down 5% fairly quickly. I'm not nervous enough that this is, like I said, I think Trump is going to, if the market falls another 5%, I think Trump's going to scramble to get a deal done. And so I think you're going to have Trump defending this market if it starts to fall too significantly here. So I'm not as nervous as a lot of people out there.
And my point was, just to wrap this up, if you're going to get nervous every time there's a 3%, 5% drop, then stop. Basically, is my point. There is nothing in the economic data that we've been getting to indicate that like a major crisis is coming. And people,
I mean, what's your time frame? You've got to ask yourself that too. That's the most important question. I mean, Spencer Israel's time frame, he's young. He's got a 25, 30-year time frame on some of these, Disney stocks that he's buying. So, I mean, what's your time frame? Are you a trader? Because if you're a trader, I don't think I want to be long stocks here as a trader. But as a long-term investor, I'm still, probably 60% invested, maybe more, 65%, a little bit too much cash. But I always carry a little bit more cash too. I'm not as young as Spencer Israel here. So, I do plan on, slowing down here eventually. And, I've got some other stuff too. We're planning on building a house and doing some different things. So, I mean, I've raised cash for some different plethora of reasons. But I mean, it's all about your time frame. I mean, Joel, what are you doing? You've got long-term investments here.
I always have too much cash.
I do too. And maybe it's the, nervous guy. I've always had too much cash all the way up as well. So, I mean, I don't think this is a scenario where you liquidate your portfolio and try to time it. I've always done a very poor job trying to time my long-term investments. I do a very good job day trading. I do an okay job, I think, swing trading. I think I could still improve in my swing trading. The long-term investing, I do a worse job timing. And I mean, I did a poor job here too. I got nervous and sold some stuff back in December. Yes, it went down after I sold, but I didn't rebuy. So that was my problem. And now I look and the market's higher from where it is, and I wish I would have not sold anything. So you'll never have super huge winners if you're always getting nervous every time we have a little bit of a dip. So if you're thinking, your time frame's 20 years out, use those opportunities to buy the stocks that you think are good value here right now. I'm not saying go out and buy stocks with P's of 100 or 200, but if you think it's got a good story and you believe it can grow into a valuation that's reasonable, like growth at a reasonable price, this is the time where you start looking for, what you want to maybe nibble on. Like I said, I nibble on some Qualcomm and Disney because I believe in both those stories. I think Qualcomm's eventually over $100. I think Disney could eventually be a $200 stock. So, but time frame on those trades is long term.
In the short term, they didn't like the retail sales.
No, they did not.
Down 2% versus estimates of up 0.2%. So quite a reversal there. Also coming into retail earnings season here, that makes you maybe scratch your head about trying these things on the long side, but retail sales disappointing. Though we will get a level to come and play here. 28.21 was your intraday low from yesterday. And what I mean by intraday low is that low that takes place between 9:30 and 4:15. So 21 even. We found buyers at yesterday. Underneath that, good luck here, folks. Monday's close was 28.07. Again, just call 2800. That is the next major turning point. Tuesday's low, 99.75. Monday's low, 28.02. So 2800, big critical support level. And if you're talking about a trading range in the S&Ps, we did get to the top of the trading range. And if you're looking for it's kind of hard to figure out the bottom of the trading range because, we spent so little time down there at 27 basis of the June contract. That low was at 27. Excuse me. No, that was lower than that. Where did we get to in December? We got way down to 23.22 1/4. So if you're looking for the bottom of this trading range, we got a long way to go.
All right, 8:34 here. Let's take a quick break and grab our guest today, Gene Munster, managing partner at Loup Ventures. We'll be right back in a moment here with Gene. All right, welcome back, everyone. Pre-market prep. Spencer Israel, Joel Elconin, Dennis Dick, now joined by Gene Munster, old friend of the program, managing partner at Loup Ventures. Gene, how's it going this morning?
Doing fantastic, Spencer.
All right, Gene, thanks for coming on the show. And we got a pretty good chat here, and they'd like to take notes of analyst coverage and what they're doing and what they are not doing. But how long have you been following Apple? Do you know? Do you keep track? I mean, I know now you're at Loup Ventures, right? So you're not doing so much of the upgrades and downgrades, but I mean, you were at Piper, starting in the late 90s, early 2000s. Do you remember your first call on Apple?
I do. And this is a little bit of Gene Munster trivia that I think very few people know, but I was negative on Apple right out of the gate. They had come out with this is pre-iPod. They had come out with a music service. And the stock had gone on a split adjusted basis from like $2 to $2.50. And it was, my belief was that they really didn't add anything new to the table. There was other streaming services. Many of you on the line here might not even remember Napster, but they were competing against free services in the music side. That we had that negative view for probably a few months, and then in 2004, I think the kind of the light went on that this is not a computer company, that they're going to start to move into different directions, and that's when we became more positive.
Okay, and now it had its nice bump up, pre-earnings run, got well over $200, and now market conditions, whatever, it came down. We're well below where it was on earnings, but they've been involved in court. They're paying their lawyers a lot of money here. The Qualcomm finally came to a resolution, and then the Apple versus Pepper that opened up the door for the lawsuit. The Supreme Court ruling 5-4. Against Apple here, but who knows how long it takes lawsuits to come to a result here. But you think that's one that Apple will likely win?
Yeah, ultimately we do, and part of the reason, just to kind of give a little bit more context to this lawsuit, that the Supreme Court here ruling that went against Apple, what effectively it does, it allows a class action lawsuit of consumers to file a class action against Apple around federal trade. Now, a consumer can sue Apple directly for negligence. If, for example, a computer blew up, that's negligence. And but this idea to be able to sue direct from consumer to Apple related to antitrust is something that is new. And that inevitably will happen. We are going to have some class action lawsuits. The reason why we believe ultimately that Apple is going to win this is that we think that the App Store does provide value to consumers, whether it's curating apps, the security around apps, just even the hosting, and there's a cost to being able to download your app. And so ultimately, we believe that the courts will find that they are just in charging for that. This 15% to 30% take rate on apps, depending if it's subscription or not, that isn't an antitrust issue. That's just an open market. So I guess the good news for people who are optimistic on Apple is that this will probably take 3 to 5 years to resolve, but ultimately we think Apple will win.
Wow, that's certainly a long time for that to be resolved. I just got to go to Spencer here, and he has a question about Apple and the trade war.
So my question, Gene, is there have been some headlines about as far as how exposed Apple is to these trade war headwinds, and about Chinese consumers maybe pushing back and rejecting the company's products. I saw a headline that China's smartphone sales fell. Just a report. I don't know if this is confirmed, but China smartphone sales fell to 71.7 million units in Q1. How exposed, in your view, is Apple to this trade war shenanigans?
A good word for it. The answer is there's very little exposure, but there is a small amount of exposure relative to China, which you talked about. Maybe even stepping back and looking at the broader risk and exposure, there is a gross misunderstanding regarding the mechanics of how these tariffs work. And the U.S. government, the Trade Department's goal is to protect U.S. companies. And so they historically have not had tariffs against Apple. It is unlikely that they will put a tariff against Apple. The reason is in part because that would hurt one of the signature companies in the U.S. essentially. The kind of things that the tariffs will be levied against are Chinese products that compete directly with a U.S. counterpart. The steel and ag examples are representative of that. So I want to just put that piece of it to the side, that this tariff issue about the U.S. Separately, it's unlikely that China is going to implement some larger tariff on iPhones, because they can put tariffs even though they're manufactured in China. They can raise the price of iPhones in China. The reason why that's unlikely is that Apple is a partner. I mean, they have 1 million people that work for Foxconn that assemble Apple products. So it's unlikely that they're going to want to bite the hand that feeds them. The real issue here is a smaller issue, and it's related to exactly what you described, Spencer, is there is a boycott Apple campaign that went on in the December quarter. We saw, and they don't break these numbers out, but you can back into it, is iPhone sales in the September quarter in China. This is 15% of Apple's overall business. In the September quarter was up about 20% year over year. Then we had this Huawei CFO being arrested in Canada, broader trade rhetoric in the U.S. between U.S. and China. And iPhone unit sales in the December quarter were likely down around 40%, 40. So it was a 60% swing. Those kind of swings happen when you have a boycott. There's something bigger going on. That is probably the real risk here, is that Chinese consumers view Apple as a proxy for the U.S., and there's some sort of a boycott Apple campaign. If that happens, it's a very small percentage of the revenue, but that's probably the real risk.
Gene, Dennis Dick here. I just want to ask you about Tesla, because this is a stock that's always in the news. I mean, it's been beat up here. They've had some disappointing numbers as of late. I'm always torn on this stock, and I've been torn for a long time. I've had it, I've sold it, I've rebought it, and I've sold it. It's such a tricky stock to try to wrap your head around the valuation, because I mean, it's hard to value stocks when they're burning cash. But I like the story, I like the cars. What are your thoughts here? I know you've kind of still been behind the story here too. Do you think Tesla's a buying opportunity now? It's about 100 points down from where it was just 2 months ago.
Just before I mention that, I'd say Joel and I have gone back on this. Joel's had a great call on this. I've been too optimistic. My current view is that 2019 is going to be a difficult year for the company, specifically trying to find what the baseline demand for Model 3 is. But I do think that if someone has the luxury of owning a stock for more than a year, I think this is a great story to own. Maybe just quickly talk about this, finding the baseline demand for Model 3. Is that there was a pull forward in demand because there was so much pent-up demand for the Model 3. So a lot of that was worked through in the first 3 quarters, and then now launching in China and Europe. Once they get through that, it's really unclear what the baseline demand is. And so that's the part about the difficult 2019. Beyond that, I think that there are 2 undeniable truths that Tesla is going to be a winner in. One is electrification of cars, and second is autonomy. And I do believe, with all due respect to the incumbents in the auto space, that Tesla does have a lead when it comes to efficiency of batteries on the EV side, and also intelligence and their neural network around the autonomy side. I was at the event and did a Model 3, base Model 3, with just the same cameras that you would get if you purchased a Model 3 for $38,000. And it was, in fact, fully autonomous. It was quite remarkable. And we don't see other car companies having that kind of at least display. Now, we're a long ways away from fully autonomy, but despite the company's comments. So to answer your question is, I think for long-term investors, this is a great story to own, but I continue to believe 2019 is going to be difficult.
Just staying on the Tesla topic, we're on the line with Gene Munster, managing partner of Loup Ventures. Here's the thing that confuses me about, the analyst and the talk. I mean, what about Tesla? It's a computer company. I didn't think it was a car company. It's a computer company. And now, we're seeing all the focus back on the cars again. So what are they? Are they a car company or computer company?
Battery company.
battery company?
If you'd ask, I'd say what Tesla's answer to that question is, they're a renewable energy company, and they want to, and I can just imagine anybody who's more skeptical about Tesla's rolling their eyes hearing that. And what that means is they've got three basic products. They have a car, they got the power wall, the battery, and then they have the solar panels. Ultimately, what the company is today, it's more of a computer company than a car company. If you would look at these, it does have four wheels. I was recently on a tour of their factory, and you see these cars being put together, and it looks much more reminiscent of computers being assembled than it does a car being assembled. The tech, I love wrenching and working on cars. I think it is unlikely that I'll be able to fix one of these cars. So I think the answer, Joel, is that they ultimately are a computer company. Transportation more broadly, maybe to look at that from a higher level, along with healthcare, probably the two largest addressable markets that have been largely less impacted by tech. And I think you can have a car company that is a computer company masked as a car company that addresses that large addressable market.
I just want to talk about the recent IPOs, and we see you talk about stocks in the long term and the short term, but man, you seem pretty convicted on this Uber IPO and the pricing of it, even though it was below Wall Street's original projection stuff. Very firm on it being overvalued on the opening day. Two-part question here: is there a point? I mean, do you need to see some earnings? Do you need to see some more information about Uber before you find a value area? And also, when you were doing, your original research on Tesla, I mean, did you see the Uber, and I don't know how long it's been around for a while, but the Uber and the Lyft, I mean, does that change, your equation and your analysis?
So where we came with Uber and this belief that it's overvalued right out of the gate was just essentially based on two things. One is the Lyft IPO gave us a pretty easy read on how investors are valuing these companies. And if you use a Lyft-like revenue multiple on Uber, go a couple years out, it's more like a $60 billion market cap, and it came out at, call it 82. There's a wide enough gap that you had a sense that it probably trades lower. Valuation is always a dangerous game to play when you think about companies that are potentially transforming the world. But the backstop of being more cautious in the near term is that the business model is going to be very different. Probably the best example is to think about what happened with Netflix. It was a DVD by mail, and then they shifted to streaming. It's a very different business today than it was 10 years ago. And they're going to be the same thing that's going to happen with Lyft and Uber. Is they will have autonomy is going to be central. If they don't get autonomy, these businesses should be worth a significant amount less. They will have autonomy as part of their stories. So that's the part of the reason why we think this also will be difficult years for Lyft and Uber, is just the sheer amount of investment. I think if you would say, what's the pick? Do you think these are good stories longer term? I would say own Lyft. Lyft has two advantages over Uber. One is the advantage of focus. They're really looking at moving people around, where Uber is about moving some logistics. It could be Uber Eats, Uber Freight, and then obviously Uber people. But Lyft is laser focused, which I think helps. Actually, there are three things. The second is they have a partnership approach to autonomy. So they're working with companies like Google and Waymo, and I think that's important that they don't try to solve that problem, let more tech companies solve it. And the third is a management team that I put at the highest regard, and I think they will win the favor of investors over the long haul.
All right, just real quick before we let you go, Gene, I just Want to announce that starting this month, Gene and I are going to be doing one monthly podcast, and I'm not going to be so easy on you, Gene. I'm going to come up with some tough issues, and we're going to be doing that starting this month, and we're going to hit on a lot of different issues, and because you're covering a lot more stuff, so more to come with Gene later in the month. So I just wanted to alert people to that.
Do you guys have
Can't wait.
Do you guys
Thanks for having me.
Do you guys have a catchy name for your little your
Gene's in charge of that.
Gene's in charge of the name? Oh my god.
Oh yeah. Stay tuned. Stay tuned.
All right. Gene Munster is the managing partner of Loup Ventures. Gene, as always, thanks so much for the time.
Thank you.
All right.
We haven't found the bottom yet, folks. Current low 28.1750, down 19.25 right now at 28.20 even. Not liking the retail sales number. Kind of sliced and diced through that Tuesday intraday low. Just hard to find support here between 28.21 and then the pair of lows from Monday and Tuesday right there at 2,800. Triple D, what are you seeing under the hood?
Well, let's look at imbalances, and they're very mixed here, which is surprising. I'm seeing some buy imbalances still out here, and obviously two things are going to happen. Some of these buy imbalances are obviously going to flip to sell, which is likely to happen, or you're going to start to see the S&P start to stabilize here. So I'm not a big believer in selling us down here now, the 0.6%, at least not off the hop. I think the market's overshooting a little bit here. This is just day trader talk here right now, because I'm looking Disney 57,000 to buy. I'm looking at Pfizer, and I don't know what's going on here. 262,000 to buy in Pfizer. That's that's really high for Pfizer at this time of day. I'm just looking. Procter & Gamble 22,000 to buy. That's more defensive. Square 22,000 to buy. I mean, these are small, but Macy's 60,000 to buy, but it reported earnings. There are some sell imbalances. General Electric 331,000 to sell. It's always Mr. Consistent. Always seems to be a sell imbalance in that thing every morning. But yeah, I am seeing a few buy imbalances here, which is surprising because we're down so much. So, let's, do another update here and right before we go at 7 minutes, and I'll try to do an update on Twitter. But as of right now, I don't see carnage, at least from imbalances. I do see a lot of weakness in the financials, and we knew that was going to be the case because TLT is up 84 cents now. That's significant for the banks, and Bank of America is now down 1.1%. We talked about these off the hop. Citigroup is now down over 1%. Morgan Stanley's down, are going to be down probably more than 1%. It just hasn't traded. Goldman Sachs is down 1%. So banks are going to be a source of weakness here this morning. Obviously, some tech stocks, some of the high flyers. I see Salesforce.com down 2% here this morning. So that's going to be a source of weakness. But they're not selling everything in here this morning. McDonald's was trading in the green. It's actually offered down now. But you're going to see a little rotation. I don't think it's going to be a sell everything morning.
Pfizer did have some good news at 6:46 a.m. this morning. Top line results. I'm not going to try and pronounce it. In patients age 12 and older with moderate to severe atopic dermatitis, study achieves all co-primary and secondary endpoints. So that's what generally moves these stocks. I'm just wondering if Teva was on the other side of this one.
Holy Teva, what a destruction, that stock. This is the one thing, buying stocks on bad news. And we saw that morning when Teva was down $1 and it was trading around 13. This was after it closed. And, it opened there and then tanked another $1. And now it's weaker here again. And it not only hit Teva, it hit all the generics. Mylan Labs is still going down. MYL, it's down here again this morning. LCI is another one. I think it's LCI. Yeah, Lynette. They hit that one too, and that's really been hit hard here too. Buying dogs when they're going down and still going down. Trying to catch a falling knife on dogs is a dangerous, dangerous game. I say if you like the story and you want to own the stocks, wait till they stop going down. Give me a double bottom. Give me something to lean on. But just trying to catch that falling knife can get you into situations like Lynette. And LCI a week and a half ago was $9. Then went through 8, 7, 6. Now it's down and challenging 5. I mean, you're talking about a stock's been cutting 50% in 5 trading sessions. That's and obviously the Teva news did not help them either. But all these stories are in trouble here right now. I mean, eventually they will probably find a bottom and bounce. But trying to call where that bottom's going to happen is a difficult game. And people are in the hard way in stocks like Teva and LCI.
DBAH, don't be a hero.
Yeah, don't try to be, and that's, I think, the biggest thing that I try to do sometimes in my long-term portfolio too, is I think, okay, well, it's come down enough here now. I think, I like the long-term story. I'm gonna stick this in my portfolio for the next 10 years. It's still better, to buy the stock cheaper for your long-term portfolio. So even if you believe in the story, I still think wait till it stops going down, because we've seen instances where stocks that went down. Remember, the Exxon Mobil was down like 21 out of 22 days a couple years ago. And that's incredible moves. And you're seeing stocks really obviously get significantly hit when stuff like that happens. So I don't know. Very torn here on a number of things, obviously, but from an investing standpoint. But I don't see any reason to be a hero on certain stocks. And this Teva story, this Mylan Lab story, these are broken stocks right now. And I'm not going to be here until they at least start to fix themselves.
Are we seeing any news on Teva here? Did they have a competing drug or something?
It's down another 4%. It was probably a headline. I can go take a look too, or maybe it's just continued weakness in a stock.
I haven't seen the headline this morning.
Big volume.
There's some Teva. There's some million headlines for this stock always.
I haven't seen a headline that matters this morning. Put it that way.
Continues to tumble amid price fixing charges. So they're saying it's still from the original headline, and that's what the media is attributing it to. J&J, Teva's failed bid to block opioid trial. There's a few headlines out there. I don't see anything really like a major driver here. I think it's just continued weakness in a stock that is being heavily sold.
Just a quick look at Cisco here for Jazz, and it's kind of an interesting chart, because when you look at it like on the daily, you're like, wow, man, this looks good. Look at that low from Tuesday at 5106. It looks like pretty good support. But then, like, if you pull up the monthly here, then you see that you had 4 nice green bars in a row, and now you're working on a red bar. So I don't know. I don't think it's really with the market environment right now here. I mean, yeah, if you're trying to swing trade here, you can look at this 5106, and that's a low of the move. It's a possible stop out point. They report kind of later.
Yeah, they report tonight.
Tonight?
Yeah, Cisco is tonight. So that's, maybe why they're asking the question here too. A stock I'm torn on as well. This is one that I have on my shopping list. I would love to get into the mid 40s, but let's just set up some hypothetical situations here. Okay, let's say they come out and they beat and they report a really good quarter. Stock maybe pops $53, $54. You run into overhead supply issues again. So I don't know. Like, do you want to own something into a quarter? Unless this market has drastic turnaround today. And, overall market sentiment, obviously drives some of these prices, at least right now, from earnings. But we're in a market environment where they are quick to sell winners right now. So even if this thing reports and gets a good pop, does it hold? And if it disappoints, you could have an Agilent on your hands. So hard to be long going into the report unless, like I said, this market turns around on a dime. And at 359 today, we're up 500 points in the Dow and all sentiment has turned. As of right now, that does not look to be the case. So I would say I don't want to own Cisco into the report, just because I think if it does beat, I think the pop can fade. And if it misses, it could really get pounded. So I don't like the setup.
All right, that's you mentioned Agilent there. Let's just do a quick check on that.
Still leaking.
Yeah, no heroes now. It really
it's leaked. It's only down about 30-40 cents from where we were talking about it, but right. I'm nervous about that one too.
Yep. So that we got that to cover, and let's just do a quick update on Baba. See how Baba's trading here. Holding. Yep. Holding.
Great report. Report on a day that we were up. It's a victim of reporting in the morning where they're selling everything to a certain extent too. So this would have reported, yesterday after the bell. It'd probably be a little bit different story because we were up, we had a pretty good day going, but even that, it wasn't that great of a day because it gave back towards the end of the day. So I don't know. It all depends on the day you report. Not anything reporting here this morning is obviously under weakness here, probably just because, Macy's gave it all back too. So we were talking like a stock like Macy's might be able to hold on. Well, Macy's only up 30 cents now. It was up over $1.50 this morning. So it's difficult. They're selling. They're looking places to raise cash. What about Children's Place? We just talked about that at the top of the show, saying it's hard. And here's Children's Place. Wasn't it up? Wasn't it up when we were just talking about it? PLC?
Yeah, it was. It was. That was a half hour ago.
Yeah, it's down 5 now. They're selling winners.
What about
earnings? They don't care about. They're just looking to raise cash. Stock pops up, they sell.
TCS is holding on. The Container Store.
The container.
They had earnings.
Where's TLRY? TLRY's giving back another dollar.
TCS is holding on. They're leaking, but they're holding for now. So
they don't want to own stocks right now. So more money managers are looking for the pops to sell. And that's, and they're selling even the pops on some of the dogs, which sometimes we thought those could hold. Not the case. I mean, that PLCE, and I don't know, bring up the PLCE chart. How high did we just get on that in this pre-market?
We were much higher than this. Actually,
bring it back up. I want to see it again.
We were over 120, or we got to 120 even this morning.
Holy. Okay, there's good trading in here. Fading these pops is working big time. $120 was up $8, is now down 5. 14 points is 14 points off the highs that we just set an hour ago.
105.47.
Fading some of these pops.
Keep an eye on 105.47. That was your low on Tuesday, and sure looks like we're going to give that a test this morning. So, okay, Spencer.
Yep.
You want to wrap things up?
I would do that real quick. Want to remind you folks about the Benzinga Trading Summit, June 20th in New York City at the Sheraton Times Square, or Times Square Sheraton, whatever it's actually called there. It'll be in Times Square at the Sheraton, June 20th, bzprofit.com. And I want to be sure, in case I haven't been clear over the past couple of days, Joel and Dennis and Jeremy Newsom and Anne Marie Band, they're going to be in the Traders Lounge. And to actually go in there with them, you need a ticket specifically to the Premium Traders Lounge. It's a premium ticket. It's separate from the rest of the event. It's a little bit more exclusive. So if you're going to the event to see Joel and Dennis, and I guess me, but also Joel and Dennis, get your ticket, get the premium ticket to the Traders Lounge, not just the general admission ticket.
I'm just trying to, and I'm trying to understand too. So you're going to have two separate rooms, basically one with a big stage.
Right.
And everybody's gonna, you're gonna have presenters, some big name presenters like Peter Schiff on the big stage. They're gonna do their 20-minute presentation or 30-minute presentation. That'll be going out throughout the day. And then you have the Traders Lounge, where you have some traders trading live, like Jeremy Newsom, showing you and actually trading live from in there. And then you're gonna have other traders, like me. I'm gonna be sitting and doing educational seminar presentations all day. Exactly. So I'd imagine I'm going to give like 8 hours of education in that room. And I've got to leave. I think I'm on the big stage, Joel said, for 20 minutes or something around 2 o'clock. So I'll go over the big stage then. But if you're buying just the general 99, you're going to, I'm going to be up there for like 20 minutes. But when you come into the Traders Lounge, you're going to get traders like me, Jeremy, Joel in there. I think they're all listed on the site for a good 8 hours.
I mean, you're going to be in there for a while. So yeah, everybody.
But they may not let me out.
Oh, well. So everybody will be on.
Are they going to feed me?
Yeah, we will feed you.
I'm working on the menu, Dennis.
We'll feed you some Beyond Meat burgers.
I know the guests will get fat. I just want to make sure I'm going to get fat.
We'll make sure you get some Beyond Meat burgers. So
yeah. Beyond Meat. Okay.
So real quick, on that note, premium ticket for the Traders Lounge, promo code PMP15 will get you 15% off your ticket. PMP15, bzprofit.com is your website. What, Joel?
Don't forget about Kenny Glick.
Kenny Glick will be there as well.
All
right.
Also,
who else is in the Traders Lounge?
Todd Gordon,
Kenny.
He's on CNBC all the time.
Yeah.
Yeah, but when do you get unfettered access to him?
No, exactly.
And Christian Fromhertz as well. So putting together a pretty good lineup. It'll be fun. It'll be fun to analyze the markets. And
I hope we get some traders from the chat, because I want to meet some of you guys, because some of you have been in the chat for following us for a couple of years. I want to meet some of you guys. You guys are in the area in New York. No excuses.
No excuses. On that note, that'll be it for today's show. If you missed any part of it, catch our podcast. Thanks to Gene Munster. Thanks to all of you in our chats. Please remember that all the information is for informational purposes only, not meant to be investing advice. Hope you all have a good rest of your day, and we will see you on Thursday.